This is Tuesday, January 20, 2026. Current time is 4:43 in the p.m. What I mapped off last night for silver, I probably wouldn't have took a trade today regardless, even if I was like a professional trader or whatever. Um, uh, Based off the volatility that's expected in the markets because of politics and stuff. But basically, what I thought would have been initial resistance on silver would have been up here at the 100% level at 95.26. What I would have expected to pull back to would have been 93.38. We got all that, but you had to have like a decent stop loss or be able to let it go further than what you think it may or whatever. At that time when it made that peak of the day, you never know when that's the peak, because to me, like back here, that could have been the peak, and then it could have started on a downward trend. It started back on an uptrend. I would have had to close out my short position if I started there. Would it be wise to go long there? Not necessarily, in my opinion, just because it's on the higher side of things. The alerts I had that went off today, I'll tell you. I didn't set a lot of alerts because of all the volatility in the markets, but I did have some leftover alerts from the other day. One was for crude oil. That alert went off today at 9:31 in the a.m. Okay. Yeah, that was at 9:31. Let's see if that would have been the high day or not. Pretty dang close to it. That alert went off, and that one was accurate for crude. Once that alert goes off, then what I'm expecting is a pull back to the statistical mean. On the 5-day chart, it's easier to see what exactly is what. We have multiple levels. What I mapped off from last night was here, but what I mapped off from Sunday was here. So that's what I was expecting resistance to ultimately be. Last night, what I mapped off wasn't a huge range anyway. I think I went over crude also and said that the bottom of average daily range was here too, so that'd be a really good spot to get into. And sure enough, that's a really good entry point. We buy into there, and it was like two levels that matched up, so it's more of a no-brainer. That was the play of the day for crude from what I talked about last night. Up to the top of this one here. It actually hit that one, pulled back a little bit, went to the previous 50% level, made support, then pulled up. That happens sometimes, not super often, but it does happen. Just because there's previous resistance can become support, or previous resistance can become resistance again. It kind of sold off here again and here again, so that's why it probably hesitated there to have massive momentum. But once my alert goes off, then typically that may be it for the day, especially if it's an older, taller level than like the date that I'm currently on. So that's why crude worked out the way it did, and that was definitely an excellent play by many algorithms. That and the ZH, the soybeans, the ZS, the soybean futures, that's the other alert I had go off today. That one was from Sunday evening as well. Whenever I mapped that one off, and that alert went off at 12:05 today. And I can go into the 1 minute time frame, and then 12:05 is right here at the top of the day for soy futures. Tagged it exactly, perfectly. My setup, my rules, my guidance is even though you think that you're correct, it gave you opportunity because it was mostly a flat line. The non-moving average is here. Whenever this first red candle shows up, technically that's where you can short or start shorting or think about shorting. into entry, and then your stop loss area has to be above this. That's where you stop out at least above that has to be. So you'll be able to capture most of the move, if not all the move. And that's the only other alert I had to go off today, and that was dead on the money. I didn't set an alert for the Dow Jones. Let me go back to 5-minute chart. I did not have an alert set for the Dow. What I thought was going to make some support was down here or possibly down here. What happened on the 5-minute chart though is, you never got any confirmation that it was a buy here. You technically never, on a 5-minute chart, you never got a confirmation it was a buy at the 161.8% level. So at roughly 5:10 in the morning, 5:10, that's when you actually got confirmation that it can possibly make a reversal to the upside. It also did it here, but that wasn't correlating with anything else also. Typically what needs to happen is that typically what's supposed to happen is it's supposed to aim for the 50% level at 49,158 for the Dow. I don't know, for whatever reason it couldn't make it up there today, but that's technically not a very good sign. For silver, that one did kind of as expected. I didn't get the top exactly correct. It's close. It didn't give full confirmation or full breakdown. It went above it. This is when you would have been, if you did start a short position there, you would have had to close a short position possibly, or just hope to God that eventually it gives you like a reversal signal and just keep on trying to attack a short. But that's kind of dangerous also. You want the first attempt to be more active. I didn't really like that level because it wasn't too far off this one. And silver and gold and precious metals have been just having such a bull run here lately, and that's kind of on the dangerous side. But anyway, it did what it's supposed to do. It pulled back to the previous resistance level. Resistance made support, and then the 50% roll was also there from that level. So it did basically what it's supposed to do. It wasn't perfect. The Russell today, I did not have an alert go off on that one. I did look at it though around that time of day. This morning I thought it was way oversold, so it was due a buy for sure. I should have purchased it up somewhere in here on a 5-minute chart in hindsight. When it's at a 50% level, it's neither a buy or sell in my opinion, especially when it's been hovering around that level, because typically it will choose a direction and you can expect a move to the middle of those two levels. The Russell though is overbought for sure, is below where it's supposed to be on the day. It traveled up to where I thought would make resistance also, pretty perfectly on the 5-minute chart anyway. On the 1-minute chart it probably looks a little bit different. Can't remember which was which though. Got two different numbers there correlating. Anyway, whatever it was, if it was this one here, then it would have looked like that was going to be resistance for sure. Then it flipped on you and went a little bit higher and pulled back to the statistical mean, which is again all within reason, and it always is. Palladium today, I can't remember if I had anything mapped out for that to really mount to anything. The last night when I mapped it off, the statistical level that I thought would make some resistance was up here, and it was already close to that, so it was probably more so a sell than a buy at that point in time. Kept on cracking down last night, way below it, and anyway, the statistical mean made some support here. It got back up to that 0% level for the first time, and once it starts to crack down a little bit, then you can possibly create a short position. And it hovered around the what should have been resistance by many algorithms all day for palladium, and that's that's more heartbreaking than anything whenever it hovers around a level, because that's when you're not at a statistical advantage either, and that's when you can lose accounts and stuff. NASDAQ, if this thing will ever load. My alert would have went off here. I did not have an alert set on the NASDAQ. It did create a buy. There it didn't break above the ATR trailing stop. And once it starts breaking down again, then technically you're supposed to close your long position and possibly create a short position. What stinks is whenever you get confirmation, sometimes they'll flip on you so quick that you have no room for any profit. But if you're looking at a 5-minute chart, if it's more or less flushing like that, then that's better confirmation too, as well, in my personal opinion. Because all this drop here, you had one blip of green candle. You had one little blip there, possible buy action. That's at 2:05 in the morning, and then at 5:10 in the morning, that's when you get more confirmation. It can possibly be a buy, and that's when your downward move ended, and then that's when you can become bullish and possibly hold it for a longer bullish move to the upside. S&P 500. That one didn't, on the 5-minute chart, that one worked out pretty decent for, an upward move anyway. It didn't scale towards the statistical mean like many of them do, and right now it's trading below where the 161.8% level was from last night. So that's not always a good sign either. But there is not much downward move that it can keep on going though, which is kind of good. It just depends on the pressure you get, the outside pressure you get from politics or whatever, or market makers or other countries or whatever the case may be. Crude did okay. It came down to the bottom of average daily range last night at 3:25 in the morning. That's when it'd be nice to have another laptop, because I'd be able to crank up the laptop in bed and then see that it's, potential buy right there. Because yes, I can zoom in on mobile, but it's not going to show up like it does on desktop. That was more or less a buy right there at the bottom of average daily range. Also, it was a previous statistical level that should have made support or resistance. I can't remember which. But what I thought would be resistance last night was right here. It did start breaking down a little bit. It didn't continue on, and more than likely, you would have started a short position here, then had to close your short position here, so you would have been break even at best. Previous Sunday's level and previous level I had as a mark to go off for crude was at 60.77. Never touched that today. The high today was 60.51. That went above the previous level as well. That was Sunday's level. So Sunday's level is definitely the way to go. Bitcoin, for Bitcoin hodlers. Definitely making some support on one of my old levels I had mapped off. It's getting really close to the mark I have on my alert for Bitcoin on that one, and I wish my memory was good. I'd be able to tell you exactly why that level was there at all. That was previous 111. Now this one here was on January the 9th, I guess. And a little bit laggy. Yeah, that's January the 8th right there, 7 p.m. So that first one there's what could have been in all of that. So I don't really love going by old numbers and stuff, but that 89,180, that's a solid number to look for. That's 100% within reason from the past week or so, or a little bit longer. I don't think I'm going to go over what I expect for tomorrow. That don't get no clicks anyway. I'd rather just do it in hindsight and see what I did right and see what I did wrong, and how I can keep on improving into the future, or just make these for someone else that wants to try to take over and try to do better at this than what I do. I have the gist of it, and I have way more mapped off than a whole lot of people do, and it's not too complicated once you get used to what you're actually looking at. Basically everything's based off of the bell curve, like top and bottom average daily range here. Oops. Like that correlates a whole lot. Where it's getting more consolidated. Yeah. Yeah, it's getting way more consolidated. Usually you can expect more of a broader movement to the upside when it's consolidated like that. It's not stair stepping down, it's all like getting bottlenecked up, getting ready to go. I can show you a million examples of that probably. Anything that pumps up all of a sudden. Yeah, on crude right here, it kind of got bottlenecked up. It didn't make a massive move straight out though. It got further broadened out here. It wasn't bottlenecked up. But typically, whenever you get a bigger move, it's getting bottlenecked up. The S&P, last time it was bottlenecked up is right here, pretty much. Right here, kinda in these 2 days here. And you expect a broader move from that. NASDAQ last time it was bottlenecked up was about right here. That's when it kind of flipped to being more of a bullish trend. And then you just typically go for whatever's, get in as low as you can, I guess. I don't know how to explain it. Palladium, when it was bottlenecked up last, was right here on this day. And you go in for like the 50% level between there. Well, sugar. There we go. The Russell last time it was bottlenecked up was right here. Well, I don't know, kind of was right here. That's consolidation. I don't know, that ain't real pretty by no stretch. It's more or less right here. And then right here, kinda. And then it's stair stepping up. And silver's just been on tear. It's easy to be like, look how great silver's doing and how wonderful it is when, it's like extremely freaking high and it's like an obvious buy. I guess you gotta move that alert up. Now my higher price level is at 103. It was at about just above 100. So if silver went up to 103.384 tomorrow, I would be expecting it to pull back. But who the hell am I and what the hell do I know? Alright, I guess that's all I'm going to go over. Soybeans, surprisingly pretty accurate on the day from the Sunday's level. I mean, you don't get no better than that. I can torture myself, I guess. Well, from there to there, $8.58. If I could pause it, I could do the math for you, but whatever I said there, $8.61. Where is it at? There it is. $50 times 871. Well, that don't make any sense. $861. And these in quarter moves. Call it 875, I guess. 875 times 50. $437 per contract, and it's only $2,600 in your account for the trade soybeans. If I went just as much as I possibly could, theoretically, it would have been $3,062 on the day from when my alert went off till the statistical mean. But that's why I get addicted to this stuff and have been for quite some time. I hope you're happy, healthy. Well, goodbye.